Hey guys, how are we doing? So it's Crypto Insight UK here. I just want to get into this video straight away. It is the 6th of July at 12 o'clock PM in the UK. So not really much going on with Bitcoin. We're still sort of crabbing sideways. You can't really say whether we're going to go up or down. We've not really had any volume to confirm anything for the last few days. We've had the news about Grayscale's trust, and I've reported on that on TikTok, so have a look at that if you don't already know that. So what I thought I'd do today is show you how I set up my charts. It might be quite helpful for anyone who's a beginner in the market, just to show you exactly what I do. In terms of what indicators I use, the Fibonacci retracement, the exponential moving averages, and the volume, the only real things that I use, and then I just go off swing highs, swing lows, and key resistance levels. So yeah, without further ado, let's get into that. Guys, remember that I do offer paid Patreon services, one-to-ones, technical analysis group chats, news chats, those sort of things. Have a look at the links in my bio. And if you enjoy this content, please drop me a sub and like and comment on this video. It just helps me grow for free. So yeah, I'm going to start with, I might just find a new chart for us, a fresh Bitcoin chart. Let's have a look at this one. Okay, it doesn't look like I've drawn this before. Cool. So we've just gone the daily, so it's just a bit easier because we are going to go, okay, that's not got enough historical information for us. That's what I want to do. Let's go to Poloniex. That's always got a lot of history. Cool. So first we will add our moving averages. So I'll take these away and I'll take the volume away. So exponential moving averages are basically just the average price of where the price of the whatever you're looking at. So we're using Bitcoin, for example. The average price of Bitcoin, I use the 50-day and the 200-day. So the 50 days is where the average price of Bitcoin would be in the last 50 days. Should it stay on the exact average, but it takes a few extra little details into account with the exponential rather than the standard. And the 200-day is the same, but just on a 200-day time period. So what we're going to do to add these is hit this indicator buttons at the top here. I'm going to put EMA into here. I'm going to click it twice because I want both a 50 and a 200-day. They both come up as 9 if you see in the top left-hand corner here. So I'm going to hit them settings. I'm going to leave the 50-day in blue. I'm going to press inputs. I'm going to change the length to 50 and bang, there's my 50-day moving average. And I'm also going to actually just make it a little bit more thick if I can. So go for that or this. Just go for 2 thickness. So there's that one done. And then I'm going to go for the other one. I'm going to go style. I'm going to put it in red. Yeah, red. What red do I like? Let's go for that red. We're going to put it on 200. And again, sorry, we are going to change the thickness. Bang, there, and there, and there we go. So there's, excuse me, there's my moving averages. So in basic technical analysis, if the blue line is above the red, that signals that we are in an uptrend, which means that price action, if it was going with what the indicators are indicating, the price action should be going upwards. And if the blue line comes below the red, that signals we're in a downtrend. That signals the price actually should be going downwards. Obviously, it's just an indicator, but it's also a lagging indicator, which means that like it's based on previous price action rather than projection of the future. So yeah, there's a little bit of basic information for you. If you're looking to swing trade or day trade, I'd normally trade if your blue line's above the red line, I'd be looking for a buy order, and if your red line is above the blue line, I'd be looking for a sell order. But I personally think we're in a bit of a different situation at the minute because I do think Bitcoin will rally back up here, but it's my personal opinion. We can get into that at a different time. I'm just showing you the indicators today. So the other thing that I add is my volume. Just find it the same way. It's just volume. Bang. And that should bring up these bars at the bottom here, which basically tells you how many people in the market or how many orders are going through on that day, essentially. So when there's a big spike like that, it means a lot of people are trying to sell. Like when it's red as well, that means obviously it was a red day, but it means there was a lot of people either buying or selling it on that day. So normally when we look for a breakout, either way, down or up, if we look to break, if we ever get some momentum coming through to break these moving averages, if it's confirmed by volume in the bottom, then you can think to yourself, okay, we might be on for a breakout. If we start to push up and we don't have the volume, it could be considered a fake out, as there's not much buying pressure behind that. So there's something else to take into consideration. That's why I really like the volume indicator at the bottom here. It just gives you an idea of what's going on in the market in general. And then the last tool that I really use is a Fibonacci retracement tool, and that's over here on the left hand side. If we go and find the Fibonacci retracement, it's very easy to set up. All we do is we take it from the previous high to the low. So the lowest point is obviously here. We line that up, we drag it out all the way to where we are now. Bang, so it's the wicks to the wicks, and it shows us where the market is. It showed us what the Fibonacci retracement tool actually is a percentage of a retracement rally. So when we hit, let's say, the 0.5, that's 50% retracement to the all-time high. So it takes from the all-time high, obviously goes to low. If we get all the way up to the 4236, that shows that we're 423% over the all-time high. So as you can see, if you look closely at these Fibonacci levels, they are often points of support or resistance. And for whatever reason this may be, maybe it's to do with mathematics and percentages, or maybe it's just because other traders use these and also believe in the same sort of thing. So they create order blocks on each of these lines. As you can see, we did wick touch the top of this 3.618 level, reject it, and that's when we've come back down. And we are sort of catching ourselves on this Fibonacci level here, which is a 1.618. So if you just look at these as a basic level, you can already see that people buy and sell on these levels. So if you're new to trading, it's quite simple to understand. You don't need to understand the mathematics behind it, but you can understand that these are often where people buy and sell, or place buy orders and sell orders. So it can give you an idea of where you might want to take some profits, these levels, or if we're on a downtrend, where we could catch some support and reverse. So where you may want to buy some, put some buy orders. So at these levels. So there's a real good tip for you if you're new in the market. Then the last sort of thing that I do are add resistance and support levels, which are just, I go onto this line, this box at the top left here. I just press horizontal line, and what you're basically looking for are either whole numbers, so 40,000, anywhere you think that there might be. People like whole numbers in terms of ordering, so often is resistance or support on a whole number, or a previous swing high or a previous swing low. And what I mean by that is, where there's been a lot of support or resistance in the past, you can expect there to be some kind of support or resistance in the future. So just for example, I'll just put one on this all-time high up here. So if we ever make it back up to these levels, I know that we could be looking at some resistance there. I also know there's a lot of clustered orders around this sort of section, so somewhere around here I would be looking to put another resistance level, maybe at the top of these wicks here, or again the same down here, maybe at the bottom of these wicks. There's a big wick here that seems to be rejected, so that could be one, or this wick, again that looks like where we have bounced so far if you look here. So they're basically how people look for support and resistance levels. I think that's as far as I'm going to go today with this. There are some other things that you can take into consideration, but I think they're pretty good tips and good things to practice for yourself if you are new to the market. Definitely go and look through some charts. A good way to practice is if you look at a chart like this and have a look where you think the price action would be going, and then you can like move the chart to your right and see if you thought, like from what you thought, if that was the right thing to do or not. But yeah, I'm going to start rambling now if I'm not careful. So let's have a quick look at what the total market cap's doing. we're still looking to reclaim that 200-day moving average. We did reject it yesterday. Looks like we've touched it and rejected it again today. But we're still lurking below it. We need some volume, as I said, to come through, help us push up through that. Hopefully before they cross bearish. But yeah, anyway, guys, I hope you have a great day, and I hope this helps you if you're new to trading. Let me know what you think in the comments. If you want any more technical analysis videos like this, I'll be more than happy to help you out with things like that. But yeah, peace up, A-Town down, as Usher would say.